We have Palantir stock breaking $50 for the first time ever following earnings yesterday, a market cap exceeding $112 billion. I want to talk all about it. I know it's been a while since I made a video. A couple reasons for that. I had some copyright issues on the channel. I had to wait for those to lapse and busy with work, but I want to talk about the big news that we've had on earnings. You can see the most read story today on the Street account is Palantir Technologies reports Q3, let me just get this in view here, Q3 EPS of 10 cents excluding X items versus FactSet estimate of 9 cents. So revenue, 726 million versus FactSet 705 million. The estimates were for 699 to 726. So that person was right. And adjusted income from operations of 276 versus the expectation of 240. Okay, the guidance 767 to 771 versus expectations of 745. Big beat there. Adjusted income from operations around 300. Wow, beating the 261. And expectations for revenue for the full year 2.81 versus 2.75 prior guidance. So a decent increase there. And the U.S. commercial in excess of 687 versus 672. Everything up. U.S. commercial up 54%, U.S. government up 40%. Here's the call summary. AI models commoditize. Palantir's decades-long application development provides competitive edge. We don't need to go into the numbers again. Bootcamp to mega deal conversions in under 2 months demonstrate rapid adoption and efficacy of AI solutions. U.S. government partnerships accelerated by offering infrastructure that enhances partner revenue and market access. And strategic commercial contracts minimal at 1% of Q3 revenue. Program ended 3 years ago, now irrelevant to financials. Glad to hear it. Here are the Street takeaways. We won't go through everything here, but you can pause and read the other sections. Wedbush raised their price target to $57 from $45 based on a 35 times long-term free cash flow. Morgan Stanley removed a rating and price target. William Blair noted the strength driven by government contract wins, but wary of further upside since commercial revenue fell short. Not sure what he's looking at. RBC Capital Markets raised their target. So some really incredible stuff happening. They really just couldn't even fit it all in one box here on the recent news. And things are really playing out as everyone had hoped. The quarter was great, the guidance is great, and the outlook for Q4, what it means in terms of U.S. commercial growth at 50%, everything is firing on all cylinders. It's been a wild journey from 10 to 45, back to 5 basically. It was like 560 or so where it bottomed, and now to 50. So a wild ride in Palantir. I've been following since before the listing, so it's been 4 years now, and really a totally impossible stock to predict what's going to happen one day to the next, but we've been on the right side of history here, betting it will rise over time. I want to share my thoughts on this $50 stock price and this over $100 billion valuation as someone that's been following for the public life of this company. So I really think, obviously, you have to hand it to the team. They're the ones making these results happen, and truly incredible results that they are. There's not even much for the bears to say, and that's why you see the stock up 20% today. So really, my bottom line message is the real winners here are the early investors. Because when you think about it, when you have a stock like this that has been defying all gravity, right? It's best for early investors because you're not stressed about a pop in the stock, trying to trade it, sell it back down, close your position or anything like that. And you're able to just enjoy the gains. And at the same time, when you're not trying to trade in and out, you're also not trying to open a position at all-time highs, right? Because when you see Palantir at $50 per share at a $120 billion market cap, there is some risk associated with opening a position at this level for the first time. Now, certainly you can add to a position, but you're in a privileged place to be able to do that. I think early investors are the winners here, not traders, not people that are new to the stock. It's really the early investors, because even from a, if you consider from a percentage basis, right? 5x, which is crazy. It's just crazy that it has happened that quickly. And I don't think it will happen that quickly again. It's been basically 18 months from pre-AIP to where we are now. And I don't think that sort of rise is going to happen again. So that's why I say to all early investors, let's enjoy it. And, I think this is an opportunity where you ride out the stock as it continues to make gains. And I think that's what everyone is very much looking forward to. And I also want to say, when you have a stock like this, listen, it's up 22%, incredible quarter. It's sort of breaking the models, and it did a while ago, because what the funny thing was, back when the stock was $8, like, I did a very fundamental DCF Wall Street approach. I published a report in April of 2023, right before the stock took off, where you could legitimately make the fundamental case that this growth company was undervalued by like 50% or something. Usually you cannot make the case for that. Usually that is an incredibly difficult case to make for a growth company, and nevertheless you actually could, which sort of goes to show the stock really shouldn't have been down here. There were a lot of problems the company was facing and going through, and it also shows you're really not going to be able to make the fundamental case when we're up at $50 per share. But one of the things you sort of have to frame it in your mind is, do you want to buy an undervalued stock or an overvalued stock? Oftentimes, I feel there are a lot of problems that you'll find with undervalued stocks. With overvalued stocks, at least you find people that agree. Some people think it's overvalued. Now, they think it's overvalued for a reason, but you'll often have growth like we've just seen, where it sort of breaks that narrative, where this stock in 1 year can go up 200% because it was overvalued a year ago. The business was able to overcome that narrative, essentially. So it's just an interesting framing. That's why I tend to not listen, really. When people say something's overvalued, it's like, yeah, but what basis? And let's actually take a look at that right now. So this was my model previously on, if you essentially build out total government customers, what do you expect? Average contract value, what do you expect? Total commercial. This is the part I have tweaked a bit. If you see it essentially exploding in adoption, and what is the average contract size? If they reach more medium to small size businesses, it's going to be essentially declining, but on a relative basis. And the gross margin, they've done an incredible job with margins, so we could probably actually bump that up, because I've actually been shocked at what they've been doing with margins. A really incredible job. Similar thing with sales and marketing. I think they've gotten to that point where, sure, they're not a household name, because I wouldn't say many B2B software companies are household names, but I think Palantir's as close to being that as ever. Like, I've met people that own Palantir stock that I would never have even thought would buy stocks, and like, they own Palantir. Just goes to show you people love this company. I mean, it's truly a great American success story. It's incredible. So let me finish tweaking this. I'm going to bump up the research and development, because it sounds like they're doing some great work there, as I would expect. And let's see what this comes out to. Basically, what it does here is it generates the income statement, so we're able to put a multiple and derive a stock price. But we have the actual guidance at 2.8 billion, and so I'm a little low here at 2.6 billion for this year, so we got to find a way to bump it up. I'm not sure where exactly. I'm not trying to be too precise, actually, but I would like to be a little closer to what they actually say. So let's see if that does it. Okay, let's just say they're sandbagging a little bit. They've done an incredible job with handling guidance, and I think we had to go through the lows with them to get to where we are now, which is they're actually, the delta in their guidance beats is contributing to what we see with the stock. Like, before, when they would beat guidance, it would be a beat by like 1 cent or by like $10 million. And now they're beating by, what was it, $25 million or something much more. And so it's really having a big effect, which is incredible. So here's what happens. Like, let's assume some significant growth with AIP adoption, or whatever you want to attribute it to, but in this case it's AIP, and commercial, because we know government's going to continue to do well. It's not the growth driver though. We talked about margin expansion, and some of these others, and if we see operating income go from 1 billion to 5 billion over the next 5 years, and if we assume some, this isn't right because I need to update it right now, but if we assume some multiples that look something like this, let's say in 5 years Palantir's gonna be 50 times EBIT, which would be like a quarter of what it is now. If we click generate and calculate the stock prices, what we're getting is a stock price right now of $28, but that's only because my scale here doesn't go higher. Right now it's, as you can tell, it's double that. And similar thing here, it's just pricing in a lot of growth. But regardless, if you plug in these numbers, what you get is a over $100 stock price in 2028. So like 4 years from now, depending on your numbers, obviously your numbers are going to be different, I'm getting a $110 stock price based on these numbers, which, you know, you could go one way or the other. You could, obviously, you could raise your multiple, you could raise your actual fundamental drivers, totally up to you in terms of how you're evaluating the stock. But this is what I think right now, and not sure why that's not updating, but obviously it would be higher. So this is one of my favorite things to look at on FactSet. It's called the valuation summary, and it shows us essentially on different valuation metrics, where have we been over the last 5 years, what's the average, and what's the industry. So I believe we want to be 1.0 is equal to the industry. So on a PE to growth basis, we're pretty, we're not that far away from the industry. We're only twice as high, which, is a good amount higher, but it's, not as high as 5 times for the last 12 months, but you can't look at that because this is a growth company. And for the next 12 months, 3 times higher than the industry. Price to book value, 2 times higher. So there's a lot of ways in which Palantir is much higher on a valuation basis, but we've talked about the reasons why that is. So let's also take a look at the valuation charts. We could just see what's happened over time. So for an enterprise value to sales basis, Palantir was much higher. Palantir was like 50 times back in its peak of 2021. Now it's about 30. Granted, it was as low as 5. I make the argument it never should have been that low for a company of this caliber. But let's also look at one other before we close out here. Let's do price to earnings growth of next 12 months. So this is a good example of, if you can see, it's a little small here. The price to earnings growth metric has fallen off a cliff after earnings, and that's because of how good their earnings were. Fundamentals continue to improve. Often you will see metrics like this actually go down after earnings, which is a good thing, because you want to buy as low as you can, obviously, on multiples like these. You can see how low it was in the past and how high it was when they first became profitable. But I'll leave it there for now. I'd love to know your thoughts in the comments on this quarter, on Palantir's run, on what you want to hear more from me. Until next time.